management of TCS joining us on the show. Samir Seksaria, the Chief Financial Officer, as well as Milind Lakkad, the Chief Human Resource Officer with us. Thank you, gentlemen, for making time and speaking with ET now. Let's start with the good news first. And the positives this time around came in from the margin front. A big beat versus expectation, 24.3 versus 23.6% expected. But it came from subcontracted costs as well as better utilization. My question to you is there more scope of improvement there? Because in our last conversations, you did indicate that they're nearing critical mass. Okay.
Good morning, Anisha. And if you look at this quarter, when we saw that the top line was sluggish, we concentrated on our cost structures and we could deliver the 110 basis points margin improvement, as you rightly called out. That came from disciplined execution, which is mainly on account of driving better productivity, utilization, and subcontractor costs. If you look at these three levers per se, I believe there's further scope of optimization, and we collectively continue to look at these levers to drive further optimization. We also drew 35 basis points from driving efficiencies on discretionary expenses. I had mentioned these had achieved critical mass post the pandemic fall which we had, and we could reasonably optimize on those expenses as well. And that's the combination of how we have delivered it. Looking forward, with the levers available, growth when it kicks in accelerates the journey on margins.
And that's a big question. When does the growth kick in?
Yeah, we have to see. If you look at the current trends, the near-term macros are uncertain, and that's visible across the board. So what we are doing is monitoring the situation on a month-on-month basis, and currently on the month-on-month basis, trends have remained similar.
Okay, so of course no recovery that you're expecting in Q3 because I'm guessing there's a business planning which has gone into the works. So Q3 or maybe Q4?
Let's see. Month-on-month basis is what we are monitoring, and you would also appreciate that there's normal seasonality which kicks in Q3 and to an extent in Q4. We need to keep that in mind as well.
Okay, let's see when that growth kicks in and how much impact does seasonality have. But the other thing, Milind, has been utilization, of course, is something that you've been supporting. But if you look at the last 12 months, the cycle has very quickly moved from, the focus on, hiring to retaining and now to better utilization. How have you and the team coped up with that?
We have to adopt this to the business situation that we have been doing it. I think it is important that we are agile in this manner and adopt in a way which is basically to take care of our people, our employees, and other stakeholders. And that is something which we have been doing all along, so it is not new to us.
Sure, not new, but the extent of slowdown that we have seen is a bit surprising. At least in the last half a decade or 1 decade, we haven't seen that. Having said that, the headcount addition target that you had laid out at the start of the year in terms of the fresher addition to the tune of 40,000, does that stay intact?
So, like I say, we have been campus hiring is our core part of our strategy, and we will continue to do that. We have been onboarding a large number of trainees in Q1. We have done in the similar numbers in Q2. We will continue to do it in the coming quarters. So that number, when they come in, how they come in, the total number, and all of that, we will decide as we go along.
Okay, so not clearly stating that 40,000 is intact or not. You will recalibrate the number as you go along.
I think in general that number is what we normally do. So I don't expect a significant change, but there will be a few changes based on how the project pauses which are happening as we go along, and all that stuff also is playing some impact, but not significant. Because we make a long-term investment in bringing those trainees there.
Sure, long-term investment that you are making, but since we are talking about Q3, just wanted to get a sense, Samir, is there any indication that you are getting that furloughs will be higher this time versus the traditional numbers that we have seen?
No, I think they should be on similar lines. So far, that's the indication. We don't see any different trend on that.
Okay. Yesterday in the press conference, you said something very interesting that you will take strategic strategic calls of recalibrating margins as the tenure of the project goes. While at the portfolio level, you will try and maintain those margins. Explain to me, how does that work?
Okay, what I mentioned was that while we maintain margins at a portfolio level, at a deal level, we might take strategic calls, and we might choose to go aggressive, and or that's the strategic call I was mentioning towards. And in the project life cycle, if you look at, margins would differ, is what I had mentioned.
So last time I talked about the tug of war between you and Milind with respect to margins and freshers. This time it seems there's a tug of war between you and the sales and marketing team. Are they twisting your arm a bit in letting go of margins? Is pricing a bit of a challenge?
Well, hopefully no one's twisting my arm. As I have always maintained, we collectively work as a team and take calls collectively rather than having any tug of wars across. Else I won't win against them.
Point taken. But no, what I'm trying to get at is that the competition is heating up, right? I mean, and there are large deals which are at stake right now. Does that mean that you are letting go of margins and trying to get the order wins first? Is that a bit of a recalibration or the focus area, at least in the near term?
Growth with profitability is always our mantra, and it is never that we will let go a opportunity just on the basis of margins.
Okay, so the opportunity is more important than margins, but growth goes along with profitability. Fair enough. But Milind, attrition, that was another good news this time around, a sharp reduction in attrition. Do you see further room for it improving, or do you think it will stay between the 14-15%?
I expect it to further come down to our industry benchmark levels, which we are used to.
And what are those levels, if you would remind me?
We're talking about 11 to 14%. So, that has been our range, and we will come to that levels.
Okay, so going back to those attrition levels, but what about this entire coming back to office? Because I think you have recalibrated your decision there as well, calling the employees full-time to office. What went behind that thought process, and how do you plan to implement it?
Anisha, as I said before, we have hired a large number of people in the last 3 years. It is critical that this new workforce get integrated into larger TCS, and we believe the only way to make that happen is to get them to office, because it's not only about doing the job 8 hours, but it's also about being with others, learning from others, just understanding how TCS works, in terms of not just work but all the other things that happens in TCS, including fun. All these things are important. That's what basically eventually drives sense of belonging, and the values get instilled in our people, and that is so important. And that's what we believe that's the right thing to do. Eventually, as we'll see evolving work models. We are open to that. And we'll do the best we need to do for what is best for our employees and our customers.
Sure, best for employees and other stakeholders, but I'm not sure if you're happy with the decision. Not about coming to office, because you already were coming full-time, but what happens to your margins? Because I'm guessing the cost related to employees, rent, electricity, all of that goes up. Is that going to be a big headwind, you think, or not as much?
So the primary thing is we did not give away any of our office infrastructure during the pandemic. We continued to invest on our infrastructure. And if you look at, so in its form, we don't see any impact due to a return to office on margins.
Okay, fair enough. No impact on margins, but you also had that strategy of 25, 25, 25, right? Has that been rolled back?
So like I said, right now we'll get everybody in the office. I'm not saying none of those models, any hybrid models are, it will be, not right to say that something is in or something is out. But we are open to all kinds of models based on the situation, how the situation evolves, how the entire workplace, marketplace evolves, and based on that we'll make a call. And like I said, we will make a call which is, the right thing to do for our people.
Okay. The other thing I wanted to bring on board is the buyback decision, of course, right? 17,000 crore at 4150. It's a bit lower than what Street was expecting. Any reason behind that? Because I do understand it is as per your policy and within those norms, but any reason where you scaled back the overall amount?
I think overall that's a board decision in terms of the quantum and the price. If you look at it, as you rightly called out, our focus is to give substantial free cash flows back to our shareholders as our capital allocation policy, and we are sticking around to that.
But are you keeping some powder dry for some acquisitions, etc. as well? I know TCS hasn't been very aggressive when it comes to large acquisitions, but given the market position right now, there might be some consolidation opportunities coming your way. Is that something which is getting incrementally more attractive?
So capital allocations are post free cash flows. That is after all decisions on investments required, wherever it is. And if you look at it right now also, we have 60,000 crores, almost 59,000 on our balance sheet. So we have sufficient cash and a war chest available for needs that may have come.
But is that a need or is that a strategy, acquisitions specifically?
We continuously monitor the horizon for opportunities. Our focus is that we want to do acquisitions for specific niche targeted areas and not just for adding it to the top line.
Sure, and one of those niche targeted areas that everyone is targeting of late is Gen AI, right? And everybody is talking about how it's going to impact. And the biggest question is how it will impact the tech industry back home, because one of the USPs of us is, good talent that we have at affordable, reasonable prices. Do you think generative AI is going to be a big disruption to the overall strength of the Indian IT industry in that case?
Anisha, we have seen it, so many technologies come in and gone, and we are seeing the progression. Every time a technology transition that is happening, it only adds to the jobs. That is first thing. The nature of the job changes as we go along, and that has happened over the years. This is no different. We all know that generative AI is going to be here. It's going to be transformational, and it's going to stay. All of that is what we need to do is to adopt quickly. Train our people, get them to build career paths on this, and eventually they will start doing things which they have not done before, or they will start using a part of AI which they were doing it before, and somebody else, a co-pilot, is going to do that for them. But this is only going to basically add to our people's skills, and also I believe even more jobs will come as a result.
I like the terminology co-pilot and autopilot that it's coming in with. But, that entire bribery case, that was also making a lot of headlines. Could you talk to me about what clarity has emerged, and have you had to lay off some people on account of that? What is the number of people which got impacted?
So the investigation is concluded, and we have taken action on 19 people. 19.
Okay, fair enough. And before I let you go, Samir, the question that I have to ask you, and I think you can pretty much anticipate this one, 26 to 28%, when are you reaching that? Okay, forget that when are you reaching, but will you end the year with 25%, and you can't use the word guiding beacon? That's disallowed. And not even aspirational. Those three words are not allowed.
Okay, then I'll say first, it's not just an aspirational target, and 26 to 28 is what we as a management team and all of us at the leadership level firmly believe that we can deliver, and that is something which we all of us are working towards.
Okay, so you didn't use the word guiding beacon, but pretty much used its definition. But at least 25% by the end of the year, any visibility?
See, if you look at Q2, it has been credible delivery on margins. Let's hope it continues.
Okay, on that positive note, gentlemen, I'll let you go. Thank you so much for making time.
Thank you.
Thank you, Anisha.
With that, it's back to you guys.